Welcome to the AI for Career Success video overview by Curt Robbins. We're experts at AI coaching and helping professionals like you and your employees upskill in AI. Now let's talk about Intel. For decades, that name was practically synonymous with cutting-edge technology. But today, the company finds itself at the center of a massive tug-of-war, caught between incredible AI-driven hype on one side and some very challenging operational realities on the other. So let's break down these two conflicting stories.
Right. So if you were only following the headlines, you'd probably think Intel was on top of the world. The company has been making a really high-profile push into artificial intelligence, and it's been securing some major partnerships, positioning itself as a key player in this global race for AI hardware.
And we're not talking about minor deals here. According to reporting from folks like Jake Perez and Carlos Martinez-Aiga, we have Tesla planning to use Intel's next-gen 14A process for its new terafab. Google is expanding its AI CPU partnership. And maybe the most significant votes of confidence, its main rival, NVIDIA, and even the US government have invested in the company. That really signals just how strategically important Intel is perceived to be.
Well, as you might expect, all of this incredibly positive news has sent Intel stock on what can only be described as a parabolic rise. It really seems like the market is betting heavily on a perfect, completely flawless execution of Intel's big comeback story.
Let's just look at the numbers for a second. In the last month alone, the stock shot up 48%. And if you look at the past year, it has more than tripled in value. I mean, this is the kind of powerful momentum that absolutely turns heads and starts to dominate the financial news cycle.
To put a more precise figure on it, analysis from Rajvinder Singh Danda highlights a massive 217% run-up in just the last year. That is a truly staggering return. And it reflects a market that is, for all intents and purposes, pricing in a perfect future for the chipmaker.
This brings us to the absolutely crucial question. When you look past those headlines and you look past that soaring stock chart, do the company's underlying financial fundamentals actually support this level of hype? Does it support this valuation?
Okay, so let's pivot. We're going to move from the market's narrative to the financial reality. A deep dive into the company's metrics, again drawing from Danda's analysis, paints a far more complicated and frankly challenging picture. And this table, well, it reveals a massive disconnect. A price-to-earnings ratio of negative 1,200, that just means the company is deeply unprofitable. Its net margins are in the negative, so it's losing money on its core operations. Free cash flow is also negative, which means it's burning through cash. And its earnings are volatile, unpredictable. This is just not the profile you expect to see from a company whose stock has tripled.
This quote from Danda's analysis really summarizes the entire situation perfectly. The story is ahead of the numbers. What this means is the market is buying into a future vision, a potential story, not the company's actual present-day performance.
The challenges aren't just on the financial statements. A closer look also reveals some pretty significant external pressures and internal execution risks, especially when it comes to its supply chain and the intense competition it's facing.
So, according to industry commentator Jeff Morrison, Intel is staring down some serious operational headwinds. There are supply constraints limiting how many chips they can actually sell. The company is expecting its margins to drop by 4 full percentage points. And maybe the most concerning thing? There's a growing movement inside Intel to outsource its most advanced chip manufacturing to partners who are seen as more reliable. And Morrison backs this up with a really stark comparison. He notes that Intel's manufacturing process produces 2 to 3 times more defective chips than its main competitor, TSMC. At that rate, it is literally cheaper and more reliable for Intel to just pay its rival to make its best chips. I mean, that's a huge challenge to Intel's core identity as a leading manufacturer. So how do we put these two completely conflicting stories together? On the one hand, you have this powerful AI-driven narrative of a comeback, and on the other, a pretty sobering operational and financial reality.
And this slide really captures the essence of the two Intels we're seeing today. On the left, you've got the narrative, the AI-fueled comeback story, major tech partnerships, a big foundry turnaround. And on the right, you have the reality, incredibly high execution risk, structural margin compression, and just fierce competition from rivals like TSMC and AMD.
What Intel is attempting here is nothing short of monumental. As Morrison's analysis lays out, the company is trying to do 3 incredibly difficult things at the same time:
reclaim process leadership from TSMC, rebuild market share against AMD, and reinvent itself as a contract manufacturer for other companies. Very few companies in history have ever successfully executed such a complex, multi-front turnaround. So, this brings us to the final, critical question for any professional or investor watching this space. Can Intel actually execute a near-perfect, historically difficult turnaround at the exact same time the market has already priced in that perfect outcome? The gap between those two possibilities, that's where the real risk and opportunity lie.
So, as we've seen, Intel stands at a true crossroads. It's a battle between a compelling story of an AI-powered future and the harsh numbers of its current reality. Which one will win out? Well, that's the multi-billion-dollar question. And this is where we teach you AI and help you get smarter than your competition. If you like these videos, please consider using the QR code from the beginning to buy us a coffee, or you can hire us to coach you or your employees in AI. We also encourage you to subscribe to the AI for Career Success YouTube channel. And finally, please like, comment, and share this video. It really helps us reach a wider audience. Thank you for watching.